Hello, everyone. I am Courtney Lombardo,
And I am Emma Hungrige.
and our business is called Taking Whisks. It is a bakery where you can buy cakes or croissants or muffins, but you can also sign up to take a class on how to bake a cake or how to decorate a cake so you can impress those people around you.
So first, we're going to show you one of our customer transactions. We're going to look at Taylor Bybee. We'll see here on this screen, she has two invoices and a payment. We're going to look at the first invoice dated 6/28 of 2022. This is invoice number 1002. We can see here, we've got her information up in the left-hand corner, her name, her email, her billing address. And we can see that she ordered a dozen blueberry muffins and a dozen lemon poppy seed muffins for a total of $192. And then if you just click the cancel button, there you go. And then we'll see here that she did in fact payment. We do see that she paid the balance in full on the same day. And you'll see here that she actually has another invoice that's open, invoice number 1010 for $55. And that is currently open. So she will have to pay that at some point. Now we'll go take a look at our one of our vendors.
So the vendor we're going to look at is Catherine Anderson. And you can see that we went ahead and ordered from her. And her information is here. And we ordered some supplies from her for $10 on June 28th. And then you can see that she sent us a bill for $10 on the same day that we purchased the items. And then we paid that bill with the Bonanza credit card. And so that has been paid off, and we are ready to go ahead and save or be accounted for in all of our expenses. Now we're going to go ahead and look at some of our reports. So the first one we'll talk about is the balance sheet.
So the balance sheet here talks about your assets versus your liabilities and equity. The point of the balance sheet is to show that you are balanced as a business. So you total up all of your current and long-term assets, and you total up your liabilities and equity, and they should match each other. When they match each other, it means that you have done your accounting correctly. But if your numbers are off, that means either you have made a mistake in your documenting process, or that your numbers are off somewhere else. And it's something that the business needs to look into, because every business needs to make sure that their assets equals their liability and equity. Now we're going to go take a look at your profit and loss statement.
So this profit and loss statement is important because it shows us if we're making money or not. And you'll see that we have a total income of $636, but we have a bunch of expenses here. And so after all of our expenses, we have a net income of a negative $378, which means we're not making any money. So we need to either increase how much we're charging for our products, or we need to reduce our expenses. Now we're going to look at our cash flows.
So the cash flow is shows you exactly where your money is coming in and going out, and in what portion of your business it's coming from or going out to. So for instance, your operating activities. So your accounts receivable, your accounts payable, your credit cards, your expenses, that kind of thing. That shows you what is coming in and what is going out. And your financing activities. So like your opening balance, equity, so money you would start your business with, that shows you where money is coming in. And obviously here on our sheet, we don't have anything in financing. We did not start the business with money. That's unrealistic just because all businesses start with investments and funding. But this is really important so that you can see exactly where your money is coming in and going out and make adjustments to your business based on this report. And that's all we've got for you today. So we really thank you for taking the time to watch this, and we hope you learned something.